Exercise E18 24B. Here we've got a sale of land for $600,000 that took place on April 1st, 2014. And we accepted in exchange a note on the sale. So we're asked to calculate, determine the amount of profit that we're going to recognize each year. Under Part A, assuming that we use the cost recovery method, and under Part B, assuming that we use the installment sales method. So, under the cost recovery method, we're going to set us up a little spreadsheet that's got the year of the sale, the amount of cash we receive, the amount of unrecovered cost, or the amount of cost that we recover in connection with that cash receipt, the amount of unrecovered costs, and finally the amount of gross profit that we're going to recognize that year. So what do we got? We've got year 2014, year 2015, and year 2016. So the original amount of the cost of this land was $122,000. So we're going to plug that in as the initial unrecovered cost. And then we're going to look at that first collection of cash that took place in 2014 of $100,000. And we're going to ask ourselves, how much of that cash represents a recovery of the initial unrecovered cost, and how much of it is cash received in excess of cost such that we are going to recognize profit on it. So if the initial cost amount was $122,000, the first $100,000 that we collect obviously is a recovery of the initial cost, and there is no gross profit to realize in 2014 because none of the cash that we collect represents cash received in excess of the initial cost of the product that was sold, in this case land. Okay, in 2015 we received $200,000 of cash. Now the first $22,000 out of that $200,000 that we collect is a recovery of the initial cost of the land, which was $122,000. Dollars 2001 through $200,000 that we received in 2015, or the remaining $178,000, is profit that we're going to recognize. By the way, I forgot to complete the unrecovered cost here. So our original cost was $122,000. From that we subtract the amount of the cash that we received that was deemed to be a recovery of cost, and our unrecovered cost in the land is $22,000. So then to finish out the cell here, the unrecovered cost in the land at the beginning of the year was $22,000. The amount of this year's cash collections that was deemed to be a recovery of cost was $22,000. So the remaining unrecovered cost is $0. And then in year 3 we collect $300,000. None of that is deemed to be a part of cost recovery because we've already recovered the full cost of $122,000 in cash collections. So the full $300,000 is going to be recognized as gross profit. So let's add us a column here, a row here, so that we can sum up what we've got. So we have $478,000 of gross profit that we realized. We reported 0 in 2014, 178,000 in 2015, and 300,000 in 2016. That 478, of course, is simply the difference between the sales price of the land, which is $600,000, and the cost of the land, which was $122,000. $600,000 minus $122,000 is at $478. So, to reiterate, the first $122,000 of cash that we collect from the customer is deemed to be a recovery of the cost of the land, and dollars 122,001 through 600,000 is deemed to be gross profit that we're going to report over on our income statement. Now, if we use the installment method, once again we've got 2014, 2015, 2016. We're going to simply copy down from here the cash that we collected in each of the 3 years, paste it there. Now we need to calculate our gross profit rate. So let's see. We've got gross profit of $478,000, and we had a sales price of $600,000. So our, I left a zero out someplace, or I added too many zeros in the numerator. So it's 478,000 divided by 600,000. That gives us our gross profit rate of 0.796667. So 0.796667. We're going to plug in that under the column for the gross profit rate, and then the gross profit that we're going to realize and report on the income statement under the installment method is simply the product of the gross profit rate multiplied times the amount of cash received. So in year 2014 we're going to report $79,667 worth of gross profit. In 2015 we're going to report $159,333, and in 2016 we're going to report $239,000, and that should sum up with rounding difference, sum up to the same amount of gross profit that we reported up here. So the difference is the period in which the profit's recognized. The total amount of the profit here is exactly the same regardless of whether we use cost recovery or installment method. What differs is the period in which we report it. Under the cost recovery, none was recognized, none was reported on the income statement in 2014 versus 79,667 under the installment method. In 2015, 178,000 versus 159,333 of profit was reported on the income statement, and then in 2016, under the cost recovery method, we reported $300,000 of profit versus $239,000 under the installment method. So, in summary, cost recovery method, no profit is recognized until cumulative cash collections exceed the cost of the item that you sold. Under the installment method, profit is recognized in proportion to the amount of cash that you receive in each of the accounting years.